Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 5 o'clock in New York. It is Monday, July the 9th, 2018, and this is the daily report for gold and silver. Gold did close higher on the day, with August futures currently trading up $2.60 at $12.5840. The most noteworthy aspect of today's trading in gold was the intraday high, which came in at $12.6690. We'll talk about that in detail as we pull up our first charts. Silver also scored a gain of 8 cents on the day, closing at $16.15. Platinum traded higher on the day, up $5.60 at $8.54, and palladium also scored some gains today at $9.5480, up $7.20 on the day. Now, the turnaround from the highs to the lows were all based upon dollar weakness turning into dollar strength. The dollar did close higher, fractionally higher at 93.79. And the Dow Jones Industrial Average had a tremendous score today, gaining about 320 points, closing at 24,776. And finally, Bitcoin futures, 66.80, up $115 on the day. Traders, while there is absolutely no doubt that we did see gold score gains today, as I said, up about $2.50, the key to today's trading was the intraday highs that were achieved and the high point that it traded to. Intraday high 66.90, and we can clearly see a level of resistance that is currently residing in the market, which is the 78% retracement, and the 78% retracement comes in at 1267.20. In terms of any kind of support in the market, we can absolutely say with some degree of certainty that the lows achieved back in December and January of last year, when the market traded to 1240, a major level of support at this point, and a critical level that must be held if we expect to see any kind of rally and key reversal in gold pricing. At the same time, I do believe we have major resistance at 1267, as we said, the 78% retracement area, but it is much more than that, because if we look back historically at this particular price point, what we can see is a series of lows that came in which this particular area was at one time a level of support rather than a current level of resistance. And traders, of course, the recent gains that we have seen in gold have all been based upon some short-term dollar weakness. Of course, the dollar has been on an upward rampage as we saw it move back, in March and April off these lows at 88, trading as high as about 95. It attempted to take out this current level of resistance on a couple of occasions over the last couple of weeks, but has been unsuccessful up till this point. We have also seen some dollar weakness come into the market, but what is interesting is it is currently had a low today at the 23% retracement point, which comes in at 93.42, and that also corresponds quite eloquently to today's low in the market. The key is whether or not these lows hold as a supportive area, or if we see a further decline in the dollar, because that is going to be the greatest influence on the future direction of precious metals, including gold and silver. And traders, in terms of silver, it also exhibited a nice upside move today, gaining almost 8 cents at $16.14.5. We can absolutely see that the highs also matched a level of resistance, the 23% retracement that comes in roughly at 1624. The market traded just above that today. What we did note over the last week is, although gold matched the lows that were achieved back in December and January, when we look at the lows that came in silver, we can see that silver didn't sell off quite as hard because it managed to find some support well above these lows that came in. My sense is that we are now trading back within the defined range that silver has been caught up in over the last, 3 to 6 months. And we could see a return to this narrow defined range in between 17 on the top as a major level of resistance and support reemerge at approximately $16.10. Traders, what we can say at this point is as follows. First, we do have strong support that comes in from these matching lows here in July as well as back in December and January of last year. At the same time, we see some resistance which has come in at approximately 1268, the high today being about 1267. Now, we are looking at a weekly chart, and although the candle has not fully formed, what we can say is that if we do see continued upside movement throughout the week, we would get a long green candle. That green candle would look something like this. We could actually identify on a weekly chart the formation of a 3-river morning star, and that of course would be bullish and signal a strong potential for a key reversal and a return back into rally mode. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.